We are just hours away from the Federal Reserve to raise interest rates for a 10th time.
Yeah, and this will, of course, hit people coast to coast and right here in our area. Jessica Guay is watching your wallet this morning and joins us live in the newsroom with how it could impact you. And really, Jess, there are a lot of different impacts.
Yeah, that's for sure, David. And the Federal Reserve will be meeting today to discuss its next move. And some analysts expect the Fed to raise its benchmark interest rate for a 10th consecutive time as part of its campaign to temper the hottest inflation in 4 decades. Annual inflation dropped in March for the 9th consecutive month. The central bank is expected to boost its benchmark rate to a range between 5% and 5.25%, reflecting a quarter-point increase. That would reflect a 16-year high, as well as a rate that would be a full 5 percentage points higher than in March 2022. If that happens, expect higher borrowing costs from car loans to mortgages.
If you got a personal loan, you're going to see your rate go up. A home equity line of credit, you'll see your rate go up. And of course, if you need to borrow money for anything like a new car, they need to get that down to their target, which is 2%. And the way to do that is to raise rates.
There's also the possibility that the Fed could pause its aggressive action to cool down the overheated economy. Today's decision will give us a clear indication about the Fed's plans for the rest of the year, which could give you some guidance on what you can expect in terms of borrowing costs for the rest of the year. Live in the newsroom, Jessica Guay, KDKA-TV News.